what the market setup looks like for the day. And of course, you cannot detach that from what's gone on over the last 12 hours in terms of what Donald Trump has said, what China has said, and how global equities have reacted.
Yeah, so Menka, I think it's a trade war and the resultant fears which will impact trade. A lot of analysis about how the options data is sitting at various levels, or how the late layer selling is intensifying, is out of the window, because frankly the narrative now shifts firmly from local fears to what will happen to the global markets. And if the global markets would continue to roil over the course of the next few days, there is no chance that India will escape that, despite whatever may be happening on the domestic front. So the narrative is now firmly global, despite the last few days of a bit of a decoupling wherein India reacted a lot more negatively than some of the others. And frankly, I think it's difficult to predict the extent of the market damage. At least we don't even know what's the extent of the trade damage and the retaliation that will happen between the two, but difficult to predict the extent of the market damage. It could be short-lived for a couple of days, it could last really longer, it could be a protracted period of small corrections as well. It's very difficult to figure this out. I mean,
that's the overall impact, I'd say. I think if you start looking at the product-wise impact, in which we haven't been able to do as yet, local markets, product markets will get impacted differently based on, the tariffs that have been imposed on some of these products, what that means for global supply chains, what that means for global supply and prices. So I think the full impact of this is yet to be felt. What you're witnessing today is more a sentimental reaction to the fact that, this is a reversal of what we've seen take place over the last several decades in terms of globalization.
Yes.
For whatever reasons, the US thinks it's justified. And let's not forget, it's not just on goods. The US is also pondering restrictions on investments by Chinese companies in the US, right?
Yeah.
So this is now geopolitical in more ways than one. So I think all of that is going to factor in over the next several days as we look at the broader market impact and then the local product-wise or good-wise impact. Because I think there's several goods on the US list. China has announced, I think, restrictive or retaliatory tariffs on about 150 items or more. So, all of these product markets will get impacted in some way or the other.
Yeah, so the one is business, second is sentiment. Third, I was just thinking, Menka, while driving to office, that what would large global fund managers, hedge funds, ETFs, etc., be doing? And would there be a thought that until this whole battle of sorts settles down or gives us a meaningful indication of where it's headed, maybe it might be prudent to take a bit of a risk off? Not that we've seen too many flows coming in, but maybe the expectations that post-April maybe flows might come back for emerging markets and India in particular as well. Could all of that happen? I think there might be a bit of a pause to that thought process as well. And in the near term, I'm pretty certain that flows will dry off. I wouldn't be surprised if the FI numbers today and over the course of the next few days will be a sea change of what we've seen the last few days. The last few days, there was a trickle of some small money coming in, nothing inclusive, but some small money coming in. I think there could be a case for some outflows or a pause in inflows for sure into emerging markets by and large.
It's difficult to argue against that, Neeraj, but two things to keep in mind there. The trade deficit that the US runs on account of what they import from China or Chinese exports is in the region of about $350 billion, if I last remember the last number for 2017. So tariffs on $50 billion of goods, keep that in context of the total trade deficit and the total volume of trade done between these two countries. They're the two world's largest trading partners. So keep that in context, okay? We should not overblow what is being done. And the second thing is really, can India be impacted? I mean, would people look at, India very negatively thanks to what's going on between the US and China? This is a very focused battle between the US and China. And President Trump has been talking about China, its IPR violations, etc., for several months now, maybe even on the campaign trail. So maybe, what the world's reaction to global equities is not necessarily exacerbated when they look at India in any fashion.
Yeah, completely agree. It's just the fear of the unknown and what this could happen. So maybe a bit of a pause into fresh investments until all of this clears up might not be a bad case. Frankly, no point in talking about stocks, Menka, though, today. I don't want to get into that because we don't know the extent of the damage. I mean, India, the SGX is reacting a lot better than what the rest of the world markets are. We had a bit of a fall yesterday, which the world markets probably didn't have as severe at that. but there is no saying as to where this will pause.
Yeah, all right. Now, you've heard Neeraj and me talk about what's gone on over the last 12 hours, but in case you missed it, here's a quick recap of this, beginning of a trade war. U.S. President Donald Trump has followed through on his threat to impose trade restrictions against China, its largest trading partner. He announced 25% tariffs on Chinese imports worth at least $50 billion, and the products range from aerospace and machinery to information and communication technology. Trump also plans new investment restrictions on Chinese companies. Now, this is what he said. This is the first of many trade actions. I'm quoting him. He promised that more will come, while criticizing China for IPR, or intellectual property theft, worth hundreds of billions of dollars. Here's what he had to say. Listen in.
With China, we're going to be doing a Section 301 trade action. It could be about $60 billion, but that's really just a fraction of what we're talking about.
Okay, in retaliation to President Trump's tariffs, China has announced plans for reciprocal tariffs on $3 billion worth of imports from the U.S. products, ranging from steel to pork. Bloomberg's Tom McKenzie reports.
Well, it seems like it's a shot across the bow from China rather than a punch to the gut, because 3 billion versus the 50 or 60 billion that Trump is looking at is obviously a big difference between those two numbers. And they're looking at, 25% tariffs on steel and on pork, 25% on pork, I should say, 15% on steel, 15% on wine and fruit. So, yeah, it's a warning shot at this stage from China. Look, China said, and it's put out statements this morning, whether that's from the ambassador in the US or the Commerce Ministry more recently, saying that they're not afraid of a trade war and that they'll fight it to the end, essentially, is what the ambassador said. But also, clearly, China's policymakers and China's corporate leaders really do want to avoid a trade war. So I would say suggest that China is going to take a pretty measured, strategic approach in terms of its response, in terms of reciprocal measures to what's coming out of Washington. No, there are other measures, clearly, that they can take. They've got plenty of other firepower, whether that's taking overt measures, just putting stumbling blocks in place for US companies operating on the ground here in China, or making it more difficult to import, for example, US soybeans. Of course, China pulls in about a third of all the soybeans exported from the US, worth about $15 billion US, and they have plenty of other tools at their disposal. But for the moment, this is going to be probably a measured response from a Chinese government that wants to focus more domestically on some of the pressing issues here at home.
So not so bad. Only a $3 billion reaction to a $50 billion set of goods that the U.S. has imposed trade tariffs on. But this has led to comments, and slightly alarmed comments regarding what this means for trade across the world, the geopolitics of the situation. We'll play out one important comment from you. This is Cornell University Professor of Trade Policy, Ishwar Prasad. He's a China expert, and he believes that these tariffs will lead to escalating tensions between the two countries. This is what he had to say in a conversation with Bloomberg. He added that there were far better ways to tackle intellectual property theft concerns than an all-out trade war. Here's Ishwar Prasad.
Well, after a long period of saber rattling, finally the swords have been unsheathed. And it's clear that this is going to lead to escalating tensions between the two countries. But the Chinese side, for its part, has responded with some harsh rhetoric, but also the Chinese seem to be trying to play the sensible grown-ups in the room. They've threatened some degree of retaliation, but not a very broad-based retaliation as yet. I think they're waiting to see what actions precisely the Trump administration takes, because there is still a waiting period where the administration says it will get consultations with businesses going and also try to work through the WTO process. There are legitimate concerns that the U.S. administration has and that previous administrations have had as well. The fact that China does not have a sound intellectual property rights regime in place, that they do restrict market access to their markets, that is to imports from the U.S. They make it somewhat difficult for American firms to operate in the Chinese market. But there are ways to get around this that I think would be far better than a unilateral measure to strike at China using tariffs.